we've talked about investing. We've talked about keeping your savings and over time, keeping them growing over time rather than devaluing over time.
Yeah.
So, but why Bitcoin? Like, why does that matter? We don't understand the technology behind it.
Yeah.
We kind of understand maybe why it matters. And these two pieces are going to be important in formulating a conviction behind giving you tangible evidence and concrete mindset to wanting to buy it and putting and confidence to your purchasing power behind it.
Yeah.
So the first aspect of Bitcoin that we've talked a lot about already, decentralization.
Yeah.
Not having, so I guess there's a myth that we've all heard, and I'd like your response as to whether or not this is true. What happens when governments ban Bitcoin?
Yeah, it was something probably last 3 or 4 or 5 years was a possibility, and when it was small, I think you allude to when something isn't quite large enough and they see it as a threat. And when I say they, it's the central authorities globally. So I think you've got to go back to understanding why Bitcoin was created and how it was created and what drives it working. And once you do that,
well, let's do it.
Government's ability to ban it. Yeah, what we'll unpack is government's ability to ban it requires a whole lot of energy. And to invest in that amount of energy, I don't know the exact dollar figure today, they simply don't have that power or that ability to collude with one another. Because, I mean, they can't even agree on simple things, humanitarian things, let alone, an issue like this. So, and we always got to keep perspective that although Bitcoin has grown in what we see in Australian dollars and US dollars to be, sizable in its per coin, it's a small fraction. Like you mentioned, it's 0.2 of the global assets. So yes, it has grown, at a great compounding annual growth rate.
From zero,
from zero,
a million bajillion percent.
But it is not a real threat. Like it is a bit laughable. So it's not where the central figures are spending much time. And if you look at the response from Michelle Bullock from the Reserve Bank of Australia when she was questioned, I think earlier this year, she laughed it off. It was didn't even entertain the discussion or the. So it says more about that institution than it does about the asset class. So
we've dispelled a lot of the problems with government, with central banks. So therefore, we disagree with their premise. I disagree with their premise and their need.
Their existence is really put into question because
end the Fed by Ron Paul.
No, I mean, just look at it. Why do we need a central authority to control the cost of money when everything else is a free market?
Supposed to be.
Yeah, that's right. So in other words, when I want to go buy a punnet of blueberries, there's a good supply. Price then drops to $3 a punnet. When there's not a supply and I still want them, am I prepared to pay $6 for them? So I might not, because that's my price point. So that can be related to so many things, and how that markets can be distorted, like we've spoken about in housing or in currency basis. But So
in terms of the government, the myths behind whether they can ban it. China, for example, did try to ban it.
They did.
And they said that
they banned mining.
They banned mining. However, mining still exists around the world.
Well, mining then thrived in other jurisdictions.
And they banned the transaction of it at one point as well. But Chinese people still own Bitcoin.
Correct.
It still happens because, as we said before, the black market is the free market. It is the true market. Where there is a will, there is a way.
Yeah.
And you cannot control the machetes. You cannot say we're banning machetes. The machetes are still there. People might decide to not use them. People might decide to use the bins, but how will you ever know? It's the same premise behind the banning of it. One country simply cannot.
Yeah.
They cannot ban it to the extent that you think.
Well, the assumption there is that it is being used for evil, right? And you could take that run that line with pretty much every currency that exists today, because the Australian dollar is being used and funneled through either cash means or inappropriately through institutions right now. So it exists today. So, do the governments ban that? Of course they don't, because it's essential in how they function. So at some point there'll be a conversion that Bitcoin, in America leading the way like this, that Bitcoin becomes fundamental to how society functions. And whether you incorporate the broader crypto, time will tell whether, because the attributes that Bitcoin have, many of the non-Bitcoin or crypto broader, they just don't have. So, the skepticism that Bitcoiners have with all these others is that there's centralization. So you don't have a network that controls the system, that ensures that its true formation, why it was built to not allow centralization, to not allow a central authority to print more and to change the rules as it sees fit, can occur easily. It can occur, but it takes a lot of work. And right now there are tens of thousands of nodes that operate. And as new software gets added, nodes have the choice to adopt that software, whether it be through Bitcoin Core or Bitcoin Knots, which is a current issue underway. But those nodes determine what software and what filters they put in.
So they are the entities that verify the network, and they hold the ledger, and they determine what is the Bitcoin network and what is the Bitcoin transactions. They record the history of the transactions.
They verify that the transactions are authentic.
Are true.
That's right.
And so the majority of nodes verifying that network means that network is the network in which we all operate, holding Bitcoin.
Yeah. It's the gatekeeper of the rules, ensures that things are functioning in line with what the protocol was built on.
So when we say decentralized, we mean every single person, individual node runner, person running nodes, which is what? A computer.
It's a computer, yeah. Right.
They are deciding individually or as a group that we believe in this thing, we believe in this thing, as opposed to a centralized person like Vitalik Buterin who can say, no, that shouldn't have happened. We are now rolling back the code because there was a door left open here and some Ethereum got took, but we'll just delete all those transactions back to this point and we'll run it forward again. That cannot happen on the Bitcoin network unless the majority of the nodes agree to do so.
Correct. They're switching, and that takes time. So even when new software is produced and the upgrade occurs, and there'd be some minor changes that might enhance certain layers of the network, because that's happened over the past 15 years, the adoption and the process of adoption happens in a progressive manner. It doesn't happen overnight. You don't wake up in the morning and you've gone on new software. You assess, you look at that to then adopt the upgrade. So, but there could be a divide. In 2016 and 17, there was the block size wars. I wasn't intimately in amongst it, but it sounded like it was quite nasty in reading upon it. But there was a belief that Bitcoin needed to be larger in their blocks because there's a cap on the size of the blocks on the time chain or blockchain, which then limits the amount of transactions. And there was a view on some people who were Bitcoiners that they wanted to be larger because there were some benefits. Unfortunately, when you change something like that, the negatives on the security and the ability to verify every transaction to be true gets put to the background. And so the nodes basically said, no, we want to maintain the security element, which then means we hold the size of each block to, I think it's 1 megabyte, I think it is, or to the current size.
Wasn't it 2? Is it 2 megabytes? Yeah. But they wanted 8. I think
it was much larger.
There was a compromise there that they did.
It has been a compromise, but again, it's within check, so to speak. And what does that mean? It means that those blocks can be verified in that 10-minute that a block gets
every interval, the 10-minute verification, the mining and solving of that Bitcoin algorithm, the puzzle, to then proceed with those transactions. This sounds convoluted. It sounds confusing. It kind of matters. It kind of doesn't. But it's giving you a frame of why centralization matters. Yeah, that's important.
Think about it. If I'm sending Brian $1,000 or the equivalent in Bitcoin, Could be
Sign me up.
right. I'm sending you that, and I'm putting it through the blockchain, and we're on the next block. The node, the miner is putting it into their block. So when they solve the mathematical problem, they might have 3,000 transactions. One of them is ours, mine to yours. Then the node is verifying that the process we used, I had the Bitcoin, and I'm then they're verifying that it's gone to you. So all the rules that that we need to adhere to make that transaction true have been adhered to.
Right.
It's a proof of work system, and there's a big difference. Proof of work is that we've adhered to the rules of the network to actually transact. And there's no double spending that occurs. In other words, I can't then go and send it to my wife or my kids or another friend.
And the proof of work, is that the solving of the algorithm, solving of the puzzle that the miner solves, as opposed to proof of stake?
Well, the proof of stake is I have a higher number of coins than you, and so then I have
You
a
get a
larger
greater voting power.
That's right.
Yeah.
So in other words,
is that a system that we want?
Yeah.
Because isn't that Ethereum?
That's Ethereum.
Right.
Most other coins operate as a proof of stake.
Right. Yeah.
And what the rationale and what the benefits for them are is transactions can occur quickly. Things can be done quickly. But the security of the network and the centralization of the network is a byproduct. It's not a key feature.
One or two voting parties can say, we want to do this, we want to change this.
That's right.
We currently operate in that system. The government are the entities. The government and the Reserve Bank or the Fed or whatever it is, whatever jurisdiction you're in, they are individuals that centralize decision making.
Correct.
As opposed to tens of thousands of nodes.
Absolutely.
That decentralize decision making.
Yeah. So you're spot on. Whether it's governments or even corporations, you look at the major corporations that influence government policy, it's centralized. Like, they have a big influence. They're lobbyists.
Or if you hold stake in a company and they decide to do a capital raise, and you just get your holdings diluted. In a quarter, in a half, whatever it is, centralized decision made means I get diluted. I lose value.
Absolutely. So in the Bitcoin network, it doesn't matter whether you have a 0.1 of a Bitcoin or 1,000 or 100,000 Bitcoin. You don't have a greater influence.
You don't get a bigger say.
And you cannot change the rules of the network to suit yourself. So, to me, that's a very important feature, because with any other coin, or pretty much 99% of the other coins or more, they're a proof of stake concept, and therefore that manipulation, and we see it repeatedly where there is no value in the underlying asset or that coin being represented, and owners in turn rug pull, so to speak, and that is they will release coins to the market, sell them at their highest price, leaving those who invested when they're sold, which is really put the price of the coin down, holding a significant loss, not realizing that is there value there or not, because you've lost trust in this whole coin that you invested in for whatever purpose originally. So these variables exist with companies. So going back to my example around when you're researching a company, these risks exist at that level, because like you said, they could dilute just to run the company. They could issue more shares from that perspective, or issue more shares to purchase another company, or buy more debt accordingly. So in Bitcoin, this decentralization isn't a factor. In fact, it's a feature. And so it's a very key feature from an investment, because whether it's Larry Fink at BlackRock, who's accumulating, significant over 700,000 Bitcoin on behalf through his ETF strategy, or whether it's Michael Saylor, whose strategy has 630,000, or whether it's Bill, who has, whatever
undisclosed.
Number. Yeah, that's right. Whatever portion of a Bitcoin or multiples of a Bitcoin. We are equals in that our interests,
our rights are equal. That's democracy.
That's the free market.
That's the idea of democracy. Now, I don't believe that true democracy exists. Decentralization is the critical feature, as well as scarcity.
Yes.
Speak to us about scarcity.
So scarcity, I think when we look at an investment, scarcity becomes real relevant. And again, going back to the analogy of property, if you go and buy a seafront property, then generally you've outperformed probably general property performance. So because why? It's beachfront or it's rare. It's hard to get. Now, we have massive coastlines in Australia, but we all know that those coastlines are expensive. And so you're paying a premium because they're desirable. When something's desirable, whether it's a piece of art or a jewellery or a collectible, they're desirable. So why? Because there's less of them or less of that positioning of them. So we know that from history, and that will continue to reign true. That's a fundamental to a business or investment strategy. So when we're looking for future investment strategy or creating one or looking to invest into, scarcity's got to be a factor, got to be something you consider. And unlike most other coins, Bitcoin has a limit. The protocol is set that every coin that exists in circulation today, which is just under 97% of the coins have been mined, has all come through a proof of work. In other words, it's been mined. A mathematical problem has been solved by a miner who's then solved that puzzle to receive the subsidy, the reward for that solving. Now, going back, 10 years, 12 years, that reward was greater than it is today, but the value of Bitcoin was a lot less. So it was built that way. So in other words, the coin on the first cycle of Bitcoin in 2009, the reward was 50 Bitcoin per block being solved.
Every 10 minutes, 50 Bitcoin would go to that miner, the mining machine that just guesses number. Is it this one? Is it this one? Is it this one? That was the reward.
That was a reward. And so, that's 50% of the supply of the network in that 4-year period was released. And then the next 4-year cycle, so every 4 years, that subsidy that is called is halved. So the next 4-year cycle was 25 Bitcoin. Now, where we sit today, we had a halving last year in April, which I heard you mention in a previous podcast. We're at 3.125 Bitcoin.
Yep.
And that, when's the best time to mine Bitcoin? Well, it was in 2009. When's the next best time? Similar to planting an oak tree, is today, because it's only getting less. So that cycle is I think it's 210,000 blocks. So that block on average at 10 minutes is a 4-year cycle. That's where it comes from. So it's 210,000 blocks that are being mined. So, in other words, it'll be in the year approximately 2035 to 2135 to 2140, where the last portion of a block will be mined. And we know that because it's on a protocol, it's on a schedule to do that, which it cannot be interrupted.
It can be, I guess it can be changed if the majority of the nodes decide to change it, but that's future problem. It's a future issue that potentially needs to get worked out.
Well, the incentive isn't there.
Yeah.
So you're talking about a dilution or a change in the network. The question is, will there be enough nodes? So you've got to remember the nodes are generally owners of Bitcoin. And so they're looking to protect what's been created. And definitely in my case, because it's a significant portion of where I see humanity going, let alone my economic position. So, you're going to protect that, right? So
you're incentivized to protect it and not dilute yourself. But there might be subtle changes, I guess I'm indicating, like
for sure,
quantum resistance and whatever else.
Yeah. So changes in how it functions and how it evolves. Yeah, absolutely. I see that being relevant. There'll be some discussion about it, robust discussion and debate. And that should happen because we all see things from different angles and we all see it being something that can be something special. And that's the most exciting part of it, that it's going to produce, as time goes on, options for us all that, we didn't fathom. We're not fathoming today. We're not even considering today. So that scarcity aspect means that, that at a rate of that the government are producing the currency of the Australian dollar at 7 or 10% on average.
That's not scarce.
That's not scarce. And therefore, that's why your purchasing power is reduced every year because there's more of it. So therefore, the only way you keep up is by either earning more than 7% a year, so it maintains, or you're able to earn more than that.
Or you put your money into a thing that's going up greater than
that's right
the dilution factor.
Correct.
So the scarcity in Bitcoin has gone from a block reward of 50, 25, halving, 12, 6.25, 3.125.
Yes.
It is becoming more and more scarce.
Okay. Now, we all know that when something is scarce, it's desirable. It's just human nature, right? So go to the most fashionable shops or the most, the car brands that you desire the most.
The banana
McLaren.
stuck to a wall.
Yeah, that's right. McLaren, as an example. To buy a unique McLaren, you were going to pay, right? Because that is the only McLaren that might be produced of that type, because it's very hard to produce. Or
I mean, they're kind of status symbols as well. But do you? I don't want to detour it.
Yeah.
But Bitcoin as a status symbol, is it worth venturing into that? Probably
it's
not.
It's not the status symbol of it, but it's probably just the notion that as something becomes more scarce, it becomes more desirable. Now, let's be frank, so to speak, that the adoption rate of Bitcoin has really been it's a grass led movement. So 57% or thereabouts of the Bitcoin is still owned by individuals. Individuals. So this isn't a corporate treasury. This isn't a Facebook where institutions are being, a first run at it and have the majority stake. And as it pops to whatever price after its listing on the share market,
they sell something.
We get the dregs of it, and the upside is minimal.
Yeah.
That it's actually in reverse. So, I'm not sure. I remember there's a significant number of millionaires or billionaires. Even if every one of those wanted one Bitcoin, there's not enough.
Yeah, they couldn't do it.
So I think what the scarcity element means that it won't be necessarily a fashionable thing. It's more that the people who have wealth are always looking to be performing at a high rate of return, because they do have an ego. They do want to match the best performances that are out there. And if
they want to store their value over time, because those people understand inflation more than most.
Now, if over time that asset class is Bitcoin, they will get exposure to it, and they are currently doing
1%, 2%, 5%, whatever it is.
Correct. Now, they might not go to a weighting that is extraordinary, but
like you or I.
That's right. That's fine. That's and for anyone else who is been in the understands it well and is comfortable with it, but they will, as they increase that and adoption occurs on an individual, multiply that by private companies, public companies, government, states, and then nation states. Where else is it? You can see that adoption and demand will exceed what supply will be, because as the price rises, unlike something like gold, investment into Bitcoin doesn't change the number of coins that can be mined. So this is an important point. If let's say the Bitcoin Australian dollar price, which is 170 today, was to jump to 500,000 tomorrow, you are not able to produce more Bitcoin. The only thing that is showing is that if you want to buy a Bitcoin, it will cost you that much, because the sellers that are on the market, that's what they're offering. Because what that will do is that will drive more investment into mining to get the reward of 3.125, which will have to be at a higher power. So the computing power of the miner needs to be greater to get it, because the demand is higher to get the 3.125, because the value of the 3.125 has gone up 4x.
The flywheel
3x.
of that demand factor. Now, if I can just detour us to, let's talk about commodities, average commodities. When gold price goes up, the commodity cycle is that, or copper price or silver price or whatever it is, components that are used as a utility, or in gold's instance, as a store of value, when these things go up in price, it encourages investment. That's the free market operating and saying, we are going to now put more money into investing in this copper mine, this rare earths mine, whatever's the flavor of the month, whatever's going up in price. As time goes on, 2 years then pass, those mining operations are online. What happens? They mine that commodity. The price of that commodity starts coming down, because there's more it's become less scarce. We've just mined a whole bunch of it.
Yeah, assuming demand doesn't continue to rise accordingly.
Right. So demand and supply. So we're just talking about a supply factor there.
Yeah.
And then the demand thing, well, if they find an alternative to copper or an alternative to gold in an iPhone or in a device, then the demand completely goes away because they're going to use something else.
There's always a supply side response. The ability to have a supply side response is always there. And even with gold. So even with gold, there are mines today that are being specced out or out of space being considered. And at a certain price, it will be worthwhile to go and get it.
Investing in.
100%.
Whereas Bitcoin, yes, the miners are affected in terms of their block reward. With that halving, if you're not affordable, if it doesn't work economically for you as a miner, you sell your miners to someone else, another operation. The mining isn't going anywhere because always someone will do it.
Well, the reward or the subsidy, when we've only talked about the subsidy, the reward from the block being mined, the successful block mathematical problem, they do get some transaction fees, which are small. But what happens is because that 3.125 today per block, and if the value of Bitcoin's gone up, it means that they want to invest more into computing power. And we've seen that. We've seen the computing power required to mine the block. You could have a standard laptop 12 years ago. Today, you're now buying an ASICS,
your technology's outdated.
And some of these computers powering has gone up when Bitcoin's ripped up to 15,000, 20,000. So, and then you've got the energy factor to mine as well. You know, how you source your energy to mine.
That's been a reason for the cycles as well, the halving reward and the mining that's behind it.
Yeah.
Because when that changes, that cycle, the cycle is a reverse exponential growth, right? Like it's going 50 Bitcoin per block, and then it's coming down and down and down. It's going to zero.
Yeah.
It's going to zero.
That's
so
right.
This is testament to the volatility. The volatility of the price of Bitcoin will follow that, which is why we're getting less volatility and will continue to do so.
I think your point is also that the halving cycle now is less relevant.
Yes.
We saw that last year. You know, we've in previous cycles, we've seen as halving happens, we see the volatility increase. We're seeing Bitcoin have a lot less volatility at the halving or vice, because people think it's going to, go up significantly because
they're timing it. They're speculating. But what it speaks to is that when you look at the Bitcoin price, you see these peaks and troughs like that, and you're like, what the hell is that? That's volatile. This is the explanation as to why the volatility is decreasing and why it's finding itself as an asset, as well as other developments.
It's becoming, a toddler to a young boy to an adolescent.
Yeah.
We're moving into these kind of phases where I don't even think we're a teenager yet. So, and your analogy around, a boy or girl growing up is very true.
It's apt.
Yeah, that it is. I think it's very, and we've got a long way to go because we're nowhere near an adult. So, if we keep that in mind, that we are still very early and just understand why you bought it, that the decentralization and the scarcity are key components that cannot be altered without significant consensus and effort, and the ability for someone to shut it down either individually or as a government or governments certainly is nearly impossible. So the risk factor was higher 5 years ago, was 10 years ago. The risk now of that is virtually minimal or nil or close to it. So therefore, the reward still consists very high, and we'll get into why that is, even at the prices that we're seeing, because as we talked about previously, we've got so much pools of capital that we're going to draw on. So when someone considers an investment of buying a negative yielding real estate in Australia, why wouldn't you consider buying portions over periods of time with your money into Bitcoin that is growing at 30, 40, 50% plus per year, and is likely to continue that for a decade or more to come, or greater than that?
It's only going to continue to become more scarce.
That's right. That's a fact.
As opposed to housing. Yes, there's a land component. The land in housing is the scarce bit. My place here, if all the block sizes, when it becomes house prices get to a point, just like a commodity, okay, I'm going to now sell my block, subdivide, either make houses or sell them to someone else and
Yeah.
they can do the work, they will do that. The scarcity, where I am, I get no say in it. Like, if a neighborhood or an empty plot of land behind me
Yeah.
decides to open up and then they put 1,000 houses in there, I am no longer as scarce as what I once
No.
was. What does that happen to the value of my house?
That's right. That's right.
The decentralized scarcity of Bitcoin they're the most fundamental aspects to it.
Very important.
Digital scarcity backed by energy.
That's right.
So durability over time.
Yeah.
It's not decaying. A house, when you invest in a house,
that's right.
It's costing you money. Land tax, plumbing, rates. You've got to fix bits and pieces as an investment property. Even if you live in it, it still has decaying costs.
I think maybe that digital element, that it's not tangible, is hard for a lot of us to sort of really, I suppose, bring it, because we like tangible. We like the cup of coffee. We like the house because we see it. We feel like
a common comment that someone will say, why do you invest in Bitcoin? Why do you invest in houses? I invest in houses because it's tangible. I can see it. I can feel it. I get it.
Yeah. So I think that digital in combination with the durability is really good to flip it into a positive. Like, don't see it as a negative, because the world we live in, especially in Australia, I mean, most of us transact, I'd say 95%, or I know my kids, 100% is all digital. It's all money moving from one account to another, expenditure or money coming in or movement. So, think of the next generation and what they're doing. Think of, and then their generation, what I'm sure my kids are doing now. The generation after them are going to be laughing at them on what the digital age is for them.
Yeah.
So, it takes us to really have an open mind to that, but it's happening in front of us anyway. I mean, having come and operated 2 cafes over the last 10 years, the first cafe I had was a 50% cash, 50% digital. By the second cafe, it's 90-10, 90% digital transactions, 10% cash. Now, that's a signal in itself, right? So, and like I said, just look at your own life on how you transact. I mean, do you go to the post office with cash, or to a bank to, pay off a electricity bill? You probably don't. So, it's inefficient. It's much better, much easier to transact. And that's how the platforms are working as well. So I think if we look and say, well, it's only going to escalate and be more common. And if that's true, only because our parents or grandparents, as they sort of pass on and the new generation take helm, and policies are going to be built accordingly, then something like the durability of Bitcoin being digital, really comes to the fore, and transacting in Bitcoin and AI and the like becomes a solution and an outlet. So, but yeah, I agree with you that the durability, when you do a comparative around costs of something like an investment property, or to secure a piece of art or a special car, that comes with risk and costs and insurance and all these elements.
Yeah, every year,
it's quite a small amount with Bitcoin.
Every year, it's costing you $5,000 to $10,000 to decay in your home minimum. You're having to replace things within it. So even as the scarcity, the durability, the fungibility. I can transfer 0.1 Bitcoin to you. You can transfer 0.1 Bitcoin to me. Come from different places. It equals the same thing.
That's right.
It's not
going to be, that's right. It's not going to be, it won't take a different form. Yeah. That's right. 1 Bitcoin is 1 Bitcoin.
Divisibility. So the reason gold became moot as a money was because it was too hard to be divisible. They couldn't chip off a bit and then verify it and go, yes, this is definitely gold, and give a gold flake to the barista.
Yeah, that's right.
To bring two analogies together.
Authenticate that was gold.
Right. So that it doesn't make sense as a money. Technology surpassed it. It doesn't work. We've moved on.
Yeah. Yeah. But the divisibility, I think when
Bitcoin.
Bitcoin, like if you think of its ability to be 100 million sats, we will start talking in Satoshis at some point, because
so every Bitcoin is divisible by 100 million sats. They call them sats or Satoshis. one Bitcoin equals 100 million sats, you might be transacting in 10,000 sats
to buy coffee.
Whatever
That's
it
right.
is.
So when we save and convert into Bitcoin, our dollar will buy, 170 sats per dollar or whatever it might be. So that sort of language will come through as time evolves, because as Bitcoin goes from 170, 100,000 today to 500,000 or beyond in time, it'll be more relevant to talk to the sats. So the ability for it to move like that and divisible is not something that's common knowledge and not something we do frequently. But when you buy $1,000 of Bitcoin today, you essentially are buying, 16 million sats, or there are 17 million sats, that kind of thing, because it's divisible. So you can buy fractions of it and accordingly move it to somebody else on the network.
Yeah.
So,
and that functionality of it is why it's a brilliant feature of it. That's what makes
very
it
cheap, so cheap.
Digital gold. It's the same thing as gold in that it's scarce. The reason why gold was desirable and shiny and culturally useful to some, yes, it's a utility, and Peter Schiff can have his opinions on it, but even as a utility, it was a store of value.
Yeah. But the visibility also means that, and go back to that centralization, I could send you my Bitcoin or a portion of it, whatever it is, and it could be whatever the amount, without a intermediate party, right, who needs to verify it. It's verified by the network. So it's that peer-to-peer. Remember, that's its core by design, that it enables us to transact anywhere in the world at any time of the day, 24/7, because that's how it functions.
Yeah.
So, when markets are only functioning 6.5 hours a day in the US, 5 days a week, Bitcoin functions 24/7 as a network and as an open market to purchase and to sell and transact. It never sleeps. So are you not telling me that our digital age will be 24/7, whether we tokenize everything but Bitcoin is leading the way in that sense. And if I want to purchase property in Italy, I could transact and send accordingly a Bitcoin or whatever cost of that is in Bitcoin within a short period of time, and let alone contracts and the like that come with it.
And it's verified, and you have it.
Correct.
And you're able to do that sovereignly by yourself with another individual who 100%. Believes in the same thing. Even your talking points on the 24/7 part of it, there is a financial use case to that aspect. And that's why Bitcoin does move around, particularly over the weekends. It's like, what's going to happen? What's happened over the weekend?
Yeah.
What's going to happen Monday morning in America?
Yeah.
And that's the volatility that you see in Bitcoin. It predicts the future because it's the most liquid.
It moves first.
Yeah,
it's the first mover.
First mover
100%.
liquidity.
Yeah, we saw with the humanitarian issues through Iran, or what Israel are doing, and the conflict that occurs globally, that if there's conflict, that markets will have jitters when it reopens on Monday night in America, particularly, or in Australia on Monday morning, and it's occurring on a Sunday, Bitcoin will move accordingly. That's what you get in a liquid market. And you got to remember, the liquidity with Bitcoin is it's as liquid as anything going around. So your ability to transact, whether it's one Satoshi or 100 Bitcoin, is there. And again, I'll go back to the cost of that. You try and move, $100 million out of the Australian banking system into a European bank.
Yeah.
You try and move $50,000.
Yeah.
And see what resistance you get. So, and see the ability to do that within a window of an hour.
Yeah.
So, it's just so far different. It's so significantly better that I think it's a matter of time and when this all becomes just normal and business adopts this.
So if we can compare some of these aspects to some other, we've compared it a lot with housing. Let's compare it to some of these other coins, right? So Trump coin, for example, that has 1 trillion coins to be released. There's 200 billion coins that have been released already, shot up, from $1, $70, and then it's just died. That's the rug pull you're talking about. As money goes in, the people who gave themselves the coins, they just sell, cost them nothing. They rug pull you, which means that your asset just died in value.
Yeah. So what they're doing is they're escrowing coins.
Yep.
They allocate themselves, but they can't sell them for a period of time.
Then next year, another 200 billion coins. For 5 years, 200 billion coins get released. That is inflation. That's not 10% of the money supply increasing. That's 100% of the money supply increasing in a year, and then 50% increasing the next year, and then 33% the next. Like, it's disgusting. And if you don't look into it and understand, and you think, oh yeah, cool, Bitcoin's 170,000, I've missed it. I'll get the next one. I'll get the second best one. I'll get the third best one. I'll get the one that's 0.01 cents Shiba coin, but there's a couple of billion of those.
Yeah.
You're buying into something that has none of this scarcity, transparency, decentralization attached to it.
Yeah, and the other thing is, it's not. So we've got to understand there are now is capital that's flowing into Bitcoin that's investing in business development and business purposes. Like I mentioned before around Jack Dorsey. I mean, Square is, a leading digital transactor globally, right? So when he provides the option for Bitcoin transactions, that's further securing and adding value to the network and development on the network. And this is happening, whether it's in lending, whether it's in, different elements on being a medium of exchange, it's occurring. But many of us don't see that occurring, particularly in the Western world, because the need isn't as high.
Particularly in Australia.
Yeah, that's right. So, but it is where there are capital funds that are specifically orientated to Bitcoin business development, and that will become more so as capital sees the value of the asset of Bitcoin and the development of it. So we've talked about its attributes, but what we're not talking about is how second and third layers that sit above the base layer of Bitcoin will transact and develop, which will further secure Bitcoin. Because what we have seen is as Bitcoin grows in value at the base layer, not necessarily more transactions happen, but it's actually more value of transactions because they get consolidated at the higher layer and ultimately get transacted on the base layer.
Yeah.
And so when we look at, what do they say? Bitcoin is as much for enemies as it is for.
You can't tell someone else you can't use it.
No.
You can't say
Russia can't buy.
Putin and Trump can't go, you're not using it, or you're not having our oil, or you're not doing this, we're not using your monetary rails.
Yeah. So if Russia can't use the US dollar because in the Ukraine with the Ukraine war and that's the monetary penalty that they've paid, well, they're going to find other ways to transact their commodities or whatever it is they want to transact with China or anyone else. So that could be Bitcoin, but it is synonymous. So I'm not clear on that, but I suspect Putin's made many comments in regards to the the decentralized nature and the sovereignty that you have that it's not easy to identify.
Yeah, he said you can't stop it.
Yeah, you can't stop it.
And if they create their own BRICS coin, because there's commentary around that, so what? It's going to be centralized. It's not going to have these aspects. So eventually it will go to shit.
Yeah.
That's just what will happen. I mean, it doesn't matter.
That's right. So when we look at these other coins, I have not done, and I'll disclose that this once I can't get past the centralized nature of a coin, there's no point proceeding to investigate the investment class. Because if I wanted to look at an investment that is centralized, I will do an equity. I'll buy a company that has clear rules and regulations on how it needs to function that I can assess on merit, not a coin that is unregulated, that doesn't have rules pertaining to it, that can do what it wants when it wants, and it's whether it's one or five people control it. So I think it's important for people to quickly. That's my first question when someone asks me about a coin.
Solana or XRP.
I'll ask. Is it a centralized network? Do those at the helm control its ability to distribute more coins or allocate more or direct the way it functions?
And I will suggest that when you ask people that question, majority of people would say, I don't know.
Yeah. And therefore, that would be.
So when you're talking about being an investor, first and foremost on your history of markets, you have a spreadsheet or you've got a checklist of different things you're looking for, and you're ticking them off as you go. Is it cash flow positive? Does it have a lot of free cash flow that you can invest
Yes.
in? Does it have assets? What is its cost? Does it have annual recurring revenue? Is it a SaaS business? Does it have, what are the margins?
Yeah,
You're
they're
looking
great,
at
yep.
these things. Now you're suggesting, I'm putting it into your words, scarcity, decentralized, tick, tick.
Yes.
If it doesn't have those two things, you're not interested in it.
Well, it doesn't compete with Bitcoin.
Right.
And if I value those things very highly, which can't be corrupted, then why am I going to put my hard-earned money into anything other than Bitcoin?
Because you have to trust it. You're trusting the Bitcoin network based on what you know about it, or you're trusting another network or another CEO or another equity, or you're trusting the government that they'll keep propping up the housing market when you go and buy a house.
That's right. So it's not that I need to trust the network. It's verifiable. Everything what Bitcoin stands for is verifiable. You can verify the transaction, the blockchain, the existence of scarcity. It's all verifiable. I don't need someone to tell me it. I can do it myself. So the self-sovereignty kicks in as well. So someone can tell me a story about whatever it is, but if they don't have those attributes, then I'm not going to waste my time and energy. I'm going to put myself into where I can contribute positively to society in another way, because it will not perform over time. My belief is Bitcoin will give me the returns that I'm looking for generational prosperity, both personally, for my family, and for my community, because it starts to take place. El Salvador's an example of it. I mean, I look forward to getting there over the next couple of years, and I'll see it for myself. But the indicators are all there. The crime rates, what they've done with crime and taking a firm approach, but then the money and the way they've handled their fiscal position is, to me, a lot more responsible. And also the flow-on effects that come for the people and citizens. The community is a lot more, they're comfortable, they're safer, they've got viable, and if the education that's happening at 7-year-olds being educated on what sound money is and what Bitcoin is, it's unprecedented. It's not happening anywhere else globally. And that's exciting. And I think they're going to build a legacy for generations that it'll be hard to catch, right? Because who teaches sound money?
I was a teacher for 12 years, right? They don't teach critical thinking. They say they do, they don't. The system's not designed that way.
No.
We're set up to teach hierarchy. You listen to the person above you, you listen to the teacher, who listens to the coordinator, who listens to the principal, the vice principal, and the principal. And you're a cog in the machine, because we need you to go out and be productive in society and work and not ask questions and disrupt the system.
Yeah, because that's what's at play, and everyone benefits along the way, right?
And it does. That there's not necessarily, like, I don't agree with that in a lot of ways. However, I understand that as a big cohort of people, to coagulate and to move them all in the same direction, you do need to have values and principles and systems that align people to function as a society in a way that moves it. But what I'm bringing us full circle back to the start of the conversation, it's scary at the moment that we are being moved in different directions, and I don't know where we're being moved, and I don't know why. But I sense it's more towards socialism, potentially communism, but Marxism, not all the way there, not to the polar end of it, but we're being moved in ways that I don't know that I agree with them.
Yeah, I think what we're seeing is that we all feel as though, and the government feels as though they've got a responsibility to have the answers for everything.
Yeah.
And that intervention, whether it goes down the path, I mean, communism, if it worked, then we all would be living in, that equality and that fair distribution. But we know that doesn't work like that. So whereas
capitalism's the least worst economic system we have.
Well, again, capitalism is about the best use of capital, the money itself. So if people are not going to waste their hard-earned money on something in a poor allocation if the return doesn't come through, and that could be social in combination with economic. So, but if the value of that or the reward doesn't align, then you get a misallocation, and if we're seeing constant misallocation, then there's no incentive to be efficient. because you know what I mean. Like it's all breaking down. Like that's a signal. And when the government is, I suppose, well, I know we're getting a little bit off track, but when a lot of the employment is being created through government, it's like if that didn't happen, what would happen to our unemployment levels? What would happen to society?
What's really happening?
So like
underneath?
that to me worries me, because that is not a sustainable model, and like you said, it's moving to left on the spectrum, if you want to call it. But going back to what we're also seeing is that we've got, quite, I wouldn't say radical, but it's like these coins that are evolving and emerging is, that they're the next Bitcoin, because Bitcoin's had its run.
Yeah.
But the explanation, what is the business case here? And that's key and critical. If, I respect the fact that my knowledge on many coins doesn't exist. It's
rightly so.
It's deliberate, right? Because if they don't meet those core principles, then I'm not going to waste my time.
Yeah.
If other people don't value those principles, that's okay. That's for them. But what will, in the good sense of time, it'll prove its worth. Time will show what is valued. And historically, what has happened is something that is scarce, decentralized, operates honestly with a long-term horizon that's not corruptible. It's valuable, and that is a monetary. One of the things that haven't been challenged is the financial system. How we've always worked for the last 50, 70, 80, 100 years has not been challenged in the digital age. And I think we're seeing that. And that's exciting. I think I count myself very lucky to be living through this and to have access to capital to be able to buy a, Bitcoin in some way, because I know my generations will thank me, and I'm sure those who have it, I encourage you to take that approach and value it accordingly. So, and do as much as you can.
Let's dispel a couple of myths and then we'll wrap it.
Yeah.
So government's being able to ban it. We've touched on that.
Yep.
What's another myth around Bitcoin that you think that's out there that's not true?
I think we touched on the tangible one.
Yeah. We could go more into that.
Yeah,
I think
if you want to talk about that.
The IP of a company, that's intangible too. You
Correct.
can't touch the Coca-Cola brand and see what it actually
Microsoft's
is.
a great example. Like Microsoft software, right? They used to be hardware sort of based with, you have to install Microsoft itself. But now
moved to the cloud.
Yeah, it's moved to the cloud, and the way it functions is all software based. So, that's not tangible.
Yeah.
The Australian dollar's not tangible. I mean, it is when you have it as cash.
Sometimes it is. I mean, I think it's like 5% of the money's actually money, but the rest is digital. It's just numbers on an account.
Correct.
Another intangible thing.
Yeah. So like, I think we just got to broaden our spectrum around, it's not an asset that has cash flow. I agree with that, but neither does the currency, and neither does gold. This is an asset class. It's a digital asset, and it's capital. And if you really do listen to some of the work that Michael Saylor says, and it's Manhattan real estate. This is
it's digital real estate.
Yeah, 100%. Yeah. Like
back 100 years ago, if you could buy Manhattan, would you do it?
That's what's going on here, and that's what really excites me on where we're heading. In that, firstly, financially, the traditional finance has lived in the current world, which is all about fractional reserve banking and high debt levels, and that's how that works. Whereas really Bitcoin challenges that scenario, and I think we're seeing that adoption occur. And then what's ahead is so many exciting platforms that enable us to continue to pivot. And some of the things that are happening in I suppose alternative coins, if you want to call it, a lot of that will be done on Bitcoin's second and third layers. Transacting on a small scale,
because the fundamental layer of the store of value is the most important thing.
Correct.
Having that decentralized, having that scarce,
yes.
Then build your NFTs on that if that's what you want. But
Right.
If you're talking about intangibles, NFTs, it's cool. It might be scarce because that's the only one. But if I can print 100 of them tomorrow, how scarce is it?
Yeah, that's right.
And that's what a lot of famous Logan Paul and all these guys who bought these NFTs, hundreds of thousands of dollars, they're worth nothing.
They're worth nothing now. Yeah. So what other myths have we got?
a common myth is that Bitcoin is a Ponzi scheme.
Yeah.
So why isn't it?
Well, again, go back to I think know why you would own it and what is your. I think it's a form of money for me and a store of value, and it will be a medium of exchange and a unit of accounting time, right? So if that's where I think the trajectory is, I see it as something I can use for value. So I can buy a plant or a house or whatever it might be, and I see its value continue to be there over time. It's historically done that. So a Ponzi scheme has I suppose, unlimited, supply. I assume it has the ability for a centralization. In other words, someone can come in and be the biggest beneficiary of it, and then the value just deteriorates. But what we're talking about here is, if we're talking about it being money, well, money in a digital form, well, we just spoke about how we're all moving to a digital form of money. And so I only see that being more and more relevant. How can Bitcoin continue to be more adopted? Well, it's by more understanding and understanding of its key characteristics as to why it presents such value. And that is, it is scarce, it is decentralized, it is sovereign, it is portable and divisible. So all these elements go to it being something that you want to be holding and saving your hard-earned, if you're getting paid in Australia. Now, many people get paid in Bitcoin, believe it or not. A Ponzi is something that it just runs up really hard and then fails to provide the value, or the demand for it just isn't there. So more people don't want to pay the higher price to push it up higher. So it requires more people to come in.
Yeah.
Well, we know, I think it's something like 50% of the supply has come in at prices that are over $90,000.
Yep. That's US. The realized Bitcoin price. So people are deciding that I will buy this thing above 90,000 US, and I'm putting my money into it now. It's not like printed into existence and then rug pulled out.
That's right.
But a Ponzi requires more and more money coming in to bail out those and pay dividends to shareholders who are wanting to exit or to keep the returns going.
Yeah.
And it's dependent upon that system for it to continue to perpetuate. And they do call the Australian housing market at times, it's all satirical. Like, it's not really a Ponzi, but you can see how it has Ponzi-like aspects in the Australian housing market, where it's just prop after prop after prop, with the government bringing ideas and regulation and opportunity in for more people to get in so that others can get out without collapsing the whole thing.
Continuing to transact.
Yeah.
That's the key. And continuing to raise prices at a reasonable level, because I think there's recognition that when you're at 10 and 15 times your income to purchase a house, at some point
you can't do it.
How far are you going to stretch the
you can do it, but your lifestyle is completely captured, and you're working to the bone to pay for the thing.
I mean, if we look at, when the tulip Ponzi scheme, I think that's the most famous of history. That, again, the demand, I assume what happened was the demand for tulips just subsided. So all of a sudden you had, excitement and euphoria and all these things that happen. And that's happened in Bitcoin cycle, particularly in the first probably 3 cycles. What's that, through to 2020, 21, we saw the sort of euphoric phases of it. And then the decline of 50, 60, 70%. That was common. That occurred. So, they were sort of, elements of Ponzi. But what we did see is the demand come back in. And whether it was the, foundational people who knew about it and understand how it works, that it's not going away, and it represents true money and value that can be used in future, delayed gratification. We see the value coming in. And like I said, if thereabouts of 50% of the current supply has been purchased at around 90,000 US and greater, that tells me people are, continuing to pile into something that is scarce and has those attributes which we spoke of, that they value and I value. So, I can't see that changing. That I'm not going to change on what I value, why my hard-earned money should be invested in something like that. Just like, I have a home and I invested in that, but I don't look at it as a financial means to get me up.
You find value in it,
Yeah.
in what you need as a utility in
It's
your life.
safe. It's a roof over my head. It gives me warmth. It gives me cooling.
Yeah.
And I have meals with my family, which is very important to me. And, that's what I get out of that. But, from an asset or keeping my purchasing power, it's Bitcoin that I think represents the value and the upside that, hard to see that being replicated in decades to come. And you've got to remember the life of a company. There's not many companies that survive. You look at
for decades.
Yeah, that's right. You look at the top, in the S&P 500, the biggest market in the world, the top 20 or 50 companies do evolve every 20 years.
They either evolve or they die.
That's right.
And they get innovated over.
They're
and
very
they become
different.
Obsolete.
Yeah, correct. So here we have an innovation. Here we have technology and digital capital that...
It can't be innovated upon. It can't... A new coin isn't going to come out and re-innovate all these aspects of Bitcoin and then go, this is a better Bitcoin. Yeah. That's not going to happen.
It can be copied, but the network's effects that it has generated cannot be replicated.
The psychology behind it cannot be manipulated and re-emphasized.
Yeah.
In terms of it being a Ponzi, Bernie Madoff documentary, there's a couple of them on Netflix. That is the true nature of a Ponzi. Reliable dividends, 10% every year, 10%, 10%, 10%. That can't be true. What's happening? Well, a Ponzi is high returns with no risk. We've explained there is risk in Bitcoin. There's risk in your entry point.
Well, there's volatility.
And there's volatility. But there's risk in it too, because maybe it doesn't come off as an asset, but you and I believe it will, based on all our education.
So just on the risk. So I think we've spoken about that. Absolutely. You need to go on. There is risk. And that is that the network itself, what fundamentally underpins it, is corrupted. And whichever way, whether that's quantum computing and we don't adapt, or it somehow is corrupted. But then the whole Bitcoin network will fall to zero. So do you know what I mean? If someone can go in and grab and get access through cryptography, all our coins, and it falls to zero, then there's no value for that person to do that.
Yep.
It's like a bit of a... Yeah, so unless they...
I've heard that argument before, but I still think that doesn't mean it might not happen, because people are stupid and they'll do it and then realize that that's what they've done.
Yeah. So I think, again, what I do is I keep an eye on how healthy the network is, how centralized or decentralized mining occurs, that the node network, that there's, Bitcoin knots is growing at phenomenal rates. And that's important because... Bitcoin Core are undertaking, allowing op return and to virtually be eliminated through the filters and the like. So that's a new software coming out on Bitcoin Core in October that, we really need adoption of Bitcoin knots to keep those filters in play to ensure that, we're not arbitrarily storing JPEGs and, non-financial data. And, it's a financial network. We want it to be something special that was created by the cypherpunks, 15, 18 years ago, that was worked on well before their time, that doesn't allow central banks to bail out with no consequences, central banks that make absolutely high-risk bets on housing markets or whatever it is. And that's what happened with GFC, right? That lead up and what occurred. That's why the movement emerged, and that's why we saw these cryptocurrencies as well, which emerged out of Bitcoin.
It's holding accountable companies. If you speculate on Bitcoin with your Bitcoin, with your money, you speculate on something and it fails, you don't get your Bitcoin back.
Yeah.
Sorry.
That's right. And listen, from a sovereign, I mean, if I do something incorrectly, that is on me.
Yeah.
Right? So let's understand there is responsibility that goes with being sovereign.
And that is a reasonable risk too. Yes. Talking about risks.
Yes, that's right.
The other aspects, unregistered investments, obfuscation, so not being transparent with things. Bitcoin is completely transparent.
Absolutely.
The ledger's there and will continue to be there forever for anyone to look at.
I mean, I think there was I talk about transparency. I think there was an election that was, I can't remember what country it was, in the last 18 months that was basically put on the blockchain.
Oh, really?
Yeah, it was actually recorded. So, I mean, I think it's pretty transparent. That's for sure.
Yeah. This has been fantastic, Bill, chatting to you about Bitcoin,
Yep.
not crypto, Bitcoin,
Yes.
and hearing your journey. We're going to have you back. Anyone who wants to put questions in for us, dispelling myths, give us hard questions, and we'll answer them.
Yeah, we didn't touch on treasuries or what's happening with strategy.
There's heaps more to talk about, and
I'm sure there's plenty of time for that. So I'm looking forward to it.
Yeah, cool.
Yeah,
Thanks a lot.
Good stuff. Thanks, Ryan.